Okay, so hello and good evening, everyone. I hope everyone is doing absolutely fine, and I welcome you all to yet another episode of Market Insights live streaming session. And let's just wait for some other people to join up because people are joining in. Is the audio is the audio audible? Is the audio all right now? Just comment on the chat box and let me know. Okay. Okay, done. Thank you very much for confirming. So, today's session is going to be one that is kind of different from what we usually do. What we usually do is technical analysis, which is a very, very beautiful field, a very, proper field in order to analyze the price action and indicator analysis, sentiment analysis. And today's session is going to be a little bit more economic, related to macroeconomic situation, which is currently going on. You might have heard in the news about rising inflation, and if not in the news, then from us, you might have heard about it. So obviously, everybody knows what is inflation. Everybody knows how it is. Probably, many people don't understand the underlying impact of an inflation, how and why it is caused, and there is a lot of information on this topic. Actually, when there is a lack of content on any topic, then that topic is misunderstood. Okay, and when there is a lot of content on a topic, lot like zarurat se zyada, what we call in Hindi, it's more than necessary content on a topic, then again it is misunderstood. I don't know it will make sense or not, but I feel that this is true, because if you have more than necessary content out there in the market, then market listens to a lot of voices and it reacts to a lot of voices, you know. So if somebody told you that inflation is going to rise, buy gold, or inflation is going to rise in the next year or next to next year, 2 3 years, the inflation is going to rise. So buy oil, and increase the percentage of oil in your portfolio, etc., etc. Multiple interpretations can be there, but the huge condition here is that, what if we understand inflation for what it is, right? Why not just understand it as simply as it can be understood, correct? So today's session is all going to be about inflation, and there is a small metric, a statistic called CPI, and CPI has caused quite a havoc in the market recently. And we have seen this in the market. We have seen this in the market in the form of extreme volatility in a day which was very sleepy during the Asian session, and in a day which was very less volatile, and it has been turned into a boom due to CPI print of United States. Okay, so how to trade in today's environment? Maybe you didn't know about CPI print, as although if you're following this particular live stream series, you might have come to know about it, because I usually give a heads up whenever CPI print comes out of any country. But US is different, because US is highly globalized, in a highly globalized economic situation in the whole world. United States economy is highly interlinked with other economies. Okay, and what is globalization? I'm not going to go into that. Yeah, like globalization is like multiple countries are interacting with each other on an economic scale, and that is why their metrics, their inflation is passed on to other countries as well. So that is what happened during 2008 crisis. Okay, with US. during the 1929 crisis, which was the Great Depression, and there was fallout even to India in 1929. If you will read about the history, you will come to know how 1929 happened, and why there was a Great Depression, and what exactly happened. You will come to know. But that all started with Wall Street crash. Okay, it all started with the stock market crash, which was based in United States. It had a rolling impact over Europe, and because in India or other Asian countries were ruled by European powers, so these countries, Asian countries, also had an impact. Even African countries also had an impact, a rolling out impact. So if we say that inflation is US is not our concern, if any person who says that he is a diligent and acute trader in the market, and if he says that what am I to do understanding inflation in US market or in European market, then I suppose he's a bit misguided, or he doesn't understand. Okay, so this particular session is for everyone, and although multiple people might interpret inflation in many ways, which I'm not going to cover in this particular session, but it is good to know more, but to apply less. Okay, and now those who trade might make a sense out of it. It is good to know everything, but apply very less when you're trading. Okay, like the more you contemplate on your decision, the more problems are going to be created in your trading strategy. Okay, so yeah, let's begin, and just give me a moment. Sure. So, this is the current situation that we are in. Every one of us knows. Okay. So, every one of us knows how the inflation is acting up, and how the previous week CPI tried to change the market into one of the most chaotic manner, I would say, in one of the most chaotic manner. The previous CPIs have been outstanding, I would say. Such an outstanding method to uh, take trades if you know what you're doing. Okay, and personally it has been very good for me, because I knew that CPI is going to be higher than expected anyhow, and I also reflected it in the previous live sessions. So that is what is going to be uh, converted into a long drawn discussion today. So let's see what we are going to do today. We are going to kind of see what happened in the last week, just like we do every live stream, and this week's preview. That means what is going to happen in this week. Not much exciting, but let's just get on with it. Okay, then we will come on to the topic of discussion, that is CPI. What is that, and why do we need to care about it? So this one, third, is where we actually start the our actual talk. Then we get on to why is inflation going up. There are some reasons, and many of you might know it already, but inflation is just not caused. Okay, it is not just happened. Okay, you can predict inflation. Okay, when you understand macroeconomics, or many economists at central banks, whoever, like the Federal Reserve, or like the European Central Bank, multiple central banks are there. So they may be able to predict inflation, higher inflation. Okay, based on the money supply in the economy. Now that is a macroeconomic topic to discuss upon. We won't go deep into it, but that is one of the points that one needs to remember, that the amount of money supply determines if the inflation is going to go up or down. So this one is fourth point. We will just discuss it briefly. Then, what is the current scenario? What do we need to look out for? How many countries are facing this condition, and how many countries stand a problematic scenario, stand at a problematic, risky scenario as of now, based on that rollout effect that I talked about. because inflation in United States and inflation in the European area is actually rising. Okay, the next is going to be a future prediction. Although I'm not a fortune teller, or I'm not a future predictor, but we can make kind of an educated guess, and it is all based on the macroeconomics understanding that I've had over the years. So we will do a small prediction based on that, and why everything is going according to that prediction. That is also true when we'll see the market. Okay, so let's start with our discussion now. Let's switch on this market for us. Okay, okay, this one. I suppose it is visible to everyone, right? Sure. Let's just clear everything up. I've done something here. No worries. Okay. So last week we saw something about a very high volatility over the period of time. A lot of news events and a lot of trading related events which might have impacted us, and GDP came out to be lesser than expected of United Kingdom month on month, which means the economy is for sure shrinking. Also, on the context of the fiscal and the monetary confrontation of both the Bank of England and the United Kingdom government, there has been a bit of a struggle between those, and they are not able to stabilize themselves towards a harmonious policy which can help them to maintain growth and also maintain their credibility at the same time. So their credibility is hurt overall because they rolled out some policy, they rolled out some scheme, and then they took it back. It is not worthy of discussion of what kind of scheme it was. It was a bond buying scheme, and for a brief time it just jumped the bond prices and bond rates up. But it just doesn't make sense, something of such high credibility and institution does this, and that is how it suffers. The market makes it suffer, and the GDP is also suffering right now because a lot of money is flowing out of GBP. Okay, and GBP is not doing very great when it comes to, okay, when it comes to the differential with the United States dollar. Right, so this is the daily chart overall. You can see this is how it has been faring after making a double top pattern somewhere here. The price went all the way down on the date of 26th September, 23rd, 26th September, which was previous month. It was something related to, I suppose, their policy only. Some finance minister talked about tax cuts and certain programs upon which the particular market reacted in this manner. It was completely hammered. But the good thing is the trend line was maintained. This trend line was maintained, and this is, I suppose, a very huge formation that we see. It has been maintained since January. So currently, also, it is kind of coming up, but it is now seeing a loss of momentum, and it somehow can just turn back down. Okay, it might just stay here, consolidate, or just go down because the momentum is losing. If you see the price action, you see two green candles, one green, one red candle, then one green candle, one red candle. That means somewhere the upward momentum, the upward force is going down, slowing down, right? That's what price action is telling us without using any particular indicator. Okay, what's the news inbound is the inflation rate year on year, that is of GDP, and building permits and housing starts. That's some news that is going to happen in this week, I suppose, 24th October, and this one is 21st October, somewhere around. Yeah. So, this is the whole idea that GBP USD is in kind of trouble. Okay, and we saw certain reasons for that as well, certain valid reasons for which the market has basically punished this particular currency. The next one is USD, which has been quite the spectacle in the last week. It has created some outstanding bumps and dumps in the market. Started off with PPI, which was almost double the expectation, but not much impactful on the market. But the main major game happened on this particular date, October 13th. And October 13th, the CPI was double the expected amount. It was the CPI year on year also higher than the expected amount, and the core CPI also higher than the expected amount, which led to a complete chaos in the market. If you see, let's say dollar index, dollar index won't show much. 13th of October is, I suppose. Dollar index won't show much, but it would be visible on USD yen. Differential, good differential between both the currencies, interest rate differential, that's what we call it. And this was the day, 14th of October, 17th, 13th of October was this one. Now if we go back to hourly chart, the timing was 6 p.m. October 13. Okay, so let's see. 13th October, somewhere around here, right? Now this one is what you are looking for. This is the 5:30 candle. That means it incorporates the 6 o'clock wala news as well. Look at the volatility. Look at the previous volatility. Let's use one indicator which is called a simple moving average, and how the moving average might have reacted. That also is kind of worth noting. Change it to 10 and make it a bit brighter so that we can see it properly. Here we are. Look how it was consolidating. Now this is very much important to note the smallest things while we are doing something, something as minute as price action. Look at the consolidation before the news. Okay, look at this. From 12th of October in the night till the point we were expecting this particular thing. Okay, now this position, this whole consolidation here is worth noting because it tells us so many things. It tells us that the market expects, so the market goes into a consolidation. Okay, when the market expects something, the market goes into a consolidation, completely price action based move here until this point, and the price just jumped up like anything. You could have hit your stop loss in the next candle, in the next hourly candle, but I will tell you, the price was not there to go down. Okay, even such a doji, I would consider it a doji, because the real body is absolutely nothing when compared to the whole trading range. Okay, the whole high to low is called trading range, and the open to close is called the trading movement. Okay, where to where the price moved, that is more important for us. So high to low was a huge range, mind blowing range. Your stop loss, if you had have kept it here somewhere around in the next the low here somewhere around, it might have gone hit, but you didn't have to worry about it. You don't even have to keep a stop loss in certain situations where the price is going to rise up. Again, this was a reaction basically towards those who might have shorted it, or those who might have longed in this candle but wanted to clear off in this candle. Okay, clear off their trade in this particular candle, so they might have shorted it in there. They might have sold it in the next candle, in the next hour. What they didn't know is that the price is gradually going to go up no matter what they are going to do. See the moving average, how close it is to price action. Now see the moving average moving up like an arrow. Okay, now the price action has moved up in this candle above the moving average and has been above the moving average no matter what. This is one of the signals that you can think of when the price moves above the moving average. This one. Okay, this won't work. Yeah, this one. Price just moved above the moving average and it kept moving above the average. It didn't close until this red candle. So you take a short, take a long call somewhere around here. You may, okay. This is not an example of how to trade, but you may do this, and this might be the case where you might just close yourself. Okay. Using a simple moving average, how is the price action telling us to so accurately how to trade? How the moving average is telling us accurately how to trade? This is just mind blowing because I suppose, yes. So there is one thing that people usually miss out because always people want to learn more complex things. They feel like not moving averages, but MACD is a better option for us. Because it looks like a game. Now look at this and look at this. Okay, moving average I have kept, and I'm joining in our star performer of the year, MACD. Okay, it looks like a gamified version, don't you think? Okay, the screen is very small. Okay, let's do this. Look, how simple is this looking and how complicated and how charming is this looking? Okay, there's a histogram, there is a MACD line, there's a signal line, everything is happening here. So much to process in. But what people don't know is that this MACD, all these lines and histograms, is all based on moving average only. Yes, absolutely. So what is the parent material? What is the parent? Okay, this bar is also quite worth noting today, 230. Okay, huge low covering, huh? Huge low covering here. Okay, so what is the parent material of MACD? It is moving average only. And what is the parent material of moving average? Can anybody say that? If I'm asking, parent material as such, which has been derived from the moving average. Okay, so if I said that MACD's parent material or the parent data is moving averages, okay, different moving averages. Upon that we apply some formula and we get the MACD. But what about moving average itself? So I'm just putting up a question which you might answer. Okay, I'm just putting up a small question for you guys to solve on the chat box. Until then, we are just going to continue what is happening here. So, this is what happened when the CPI came out. Such enormous and outstanding move, and it's still staying up. It has not covered its position, it has not retraced to this level. Okay. Then later on, what happened was something related to retail sales and stuff like that. Okay, good enough for us. Then there was something else. What is going to happen in this week that we are going to see? So let's see what is going to happen in our week from 17, I suppose. Okay, so this one is there, and we saw that the manufacturing index was lower for very obvious reasons. The manufacturing is going down. There was no other, explanation for this. The timing is 6 for Monday. We can see the chart. It won't be much significant, I would say. Monday, 6 o'clock. This one. It is a small red candle. Okay, not much significant, but it tells a lot about what is the manufacturing, the industry is doing. So it is kindly It is humbly shrinking, I would say. Yes. Today, something happened related to this. NZD. The movement was quite good in NZD, I suppose, in the Kiwi. And the Kiwi is actually most volatile when there is news flashes. Okay. When there is news flashes, the Kiwi is quite volatile. So I will just show up that also. Apart from that, this week we can expect. Okay. Okay. This weekend we can expect the GDP quarter of Chinese yen. Okay, that one is tentative. Not much of our use. GBP CPI. This one is important. What is going to be the inflation rate and GBP? Is it going to maintain the double digit? Like recently, it was 9.9%. Now CPI we are going to discuss. So that is why it is an important metric right now, because in UK the inflation is out of hand. It is out of control, I would say, and the political condition of United Kingdom is also not very stable, and the economic policy makers are also quite chaotic in this particular situation. So it will be quite notable of what the market will do tomorrow with GBP. As I already said, just using the price action, what is going to happen with GBP tomorrow? Somewhere around, okay, somewhere around this. Where has it gone? Okay, yeah, this one we are talking about, right? Daily. We saw just using the price action, it might just come down. That was our prediction. Let's see what is going to happen. CPI is one of the important factors here. Core CPI, etc., etc. CPI is a good number to look out for. What's the timing? 11:30 in the morning. So wake up sharp and clean and just look at the data. Canadian dollars, again, CPI, what is going to happen in the inflation scenario? We will see that median and trimmed is the same thing as core CPI. Okay, you can check it out later on. Next, tomorrow we will see Australian dollar employment change, unemployment rate, good data, impactful data. We can see some movement, higher volatility in this particular timing in the morning 6 a.m. So yeah, let's see. Next, Philly Fed manufacturing index is going to be under stress, so don't worry about it. Unemployment claims might be rising. Uh, Actually, we don't have to worry about it because it is not much impact on the currency. Then retail sales, GBP, and core retail sales. No worries about it. So not much in this week to look out for. Just the CPI data of GBP, Canadian dollar, and Kiwi, I suppose. Yes. So these three things. Let's see. So these three things are going to happen. GBP we have already discussed. Let's discuss about Aussie. What is going to happen in Aussie? That is also one of the things. Okay, something I have done previously. Let's remove. I suppose we are back right now. So let's just continue. So I hope you can see the screen. Nobody has answered the question. Come on, guys. Just try to answer it because this is one of the questions that will clear a lot about what indicators are. Okay, why price action is more relevant and more accurate than the indicator itself. So the what is the parent material for moving average? Please answer that question if you know, or if you don't know, then leave a like, I suppose. uh, so let's continue where we were. Here we are. So Aussie is obviously downtrending, and the market is trying to push it up. Somewhere around here, the market is the candle is trying to breach its 10-day moving average, which is somewhat of a bullish signal. But the question rises is that whether it will maintain this movement up. Okay, that is the question. Just like here, we had a false breakout here in this scenario. Now, this moving average is acting as a resistance. Okay, so to understand this better, moving averages not only give you a confirmation of the trend, but they levels of also act as support or resistance, right? Depending on where the market is going. Moving averages are not just that, but they are very versatile to use along with the price action. So here the resistance was broken here, but in the next day it was covered back down. So such false breakout has been the case in the case of Australian dollar. When this is maintaining this kind of a movement up, then we can think of moving up with the price action. Okay, like this we have to avoid, like this we have to avoid, and like this probably we have to avoid. If it closes under the moving average, then we have to avoid absolutely. Okay, RBA meeting, whatever, this one is also there. Okay, not much to see here except for the unemployment rate. That will decide how much of a movement we can see in the market in the coming week, like in this week. So yeah, another one, if you want any other pair to be analyzed, you can just put it up on the chat box. Apart from that, let's go get on with our original topic of discussion. And we have got this. Let's start. I hope everyone can see this particular thing. Okay. So CPI, what is CPI? That is one of the questions that you might be asking yourself. This is somewhat of a fundamental analysis that we can do in the forex market, right? In the crypto market also, but crypto is not as volatile as it was. So CPI, what is CPI? CPI is one of the benchmark statistics. Okay, this is one of the benchmark, not only a statistic to record something, but it is benchmark. The central banks use this statistic to define their policies. That's how important it is. Okay, and that is why traders must know what is CPI. Traders must know the ins and outs of CPI, and also the predictions in CPI also one needs to know where it is going to go. That also needs to be understood. Next, it measures the inflation at a consumer level, that is the retail level. That means directly to the consumer, whatever the consumer is buying, how much he is buying for, and how the prices have increased over a year, over a month, over say the timing, maybe monthly, quarterly, semi-annually, or annually. So accordingly, that jump in prices is or jump in or in the slump in prices. Both the cases can be. There might be deflation also. If the prices are going down, that is called deflation. Okay, it is exact opposite of inflation. That is also possible. Unlike it sounds like a dream for us everyone that the prices of houses might decrease, so I will buy a new house. Might be the case that might people might be dreaming about it, but this happens. Deflation is possible. Okay, inflation is a byproduct of demand and supply. This is one of the most important things that I have learned about uh, in macroeconomics. It is a byproduct of demand and supply. It is formed by demand and supply. Okay, and once it is formed, it impacts demand and supply as well. How beautiful it is! It is a circular method of understanding the economy. Inflation is not just a byproduct, but later on, once it becomes an effect of demand and supply, it becomes a cause of demand and supply, disruptions in the demand and supply as well. Okay. Example, inflation currently, say for example, in Euro region, was due to a strict supply by Russian oil companies, right? And lower demand due to some moral high ground that European countries have taken. Okay, both these things have created inflation in eurozone, obviously. Now this inflation is creating more demand in eurozone, right? And there is a crunch in supply again by Russia, so it is impacting the demand again, right? So this way, it not only inflation is not only created by demand and supply, but inflation once formed, once there in the market, it again impacts demand and supply. Okay. Hence, it is highly relevant for us to look at the inflation data and adjust our trading strategy. Okay, we have to account for what day the CPI is going to come, whether the volatility is going to happen, because volatility is going to happen. And if you keep something like, say, in the case of USD, you might have shorted at that time looking at some particular indicator, you might have lost a lot of money. So we need to be, aware of this data. That is what the idea is. Next, why is inflation going up? Now, nobody wants inflation as such. Uh, you know, I also don't want inflation because it increases the expenses, and this standard of living expenses, and maintaining the standard of living might be difficult when inflation rises. But when talking about strictly in terms of macroeconomics, it is a phase in the economy. Now phase is very important word. When we come to our senses, we get to know that phase is a very very important word in the economy, and it doesn't happen overnight. Inflation is nothing like, okay, yesterday the Federal Reserve of America, here they increased the rates, and today the inflation dropped. No, it is not like that. It is a phase, and it slowly phases out of the economy. It slowly phases in the economy as well. Okay. Also, it is considered to be an indicator of the health of an economy. How it is an indicator, sir? Right? How it is an indicator? If it is bad for the people, if it is bad for the economy overall, it is bad when it is not controlled. Okay. So one of the example that I can give is, inflation is like fire. Okay. Inflation is like fire. And if you can't control that fire, it will burn your whole house. Okay. And if you can control that inflation fire, you might be able to cook with it, or you might be able to boil water with it. Do something which is productive for you, cook with it. Okay, eat food which is good and nutritious. So overall, what the thing is, inflation is like a fire. When it is not controlled, it burn the health goes on to burn the economy. Okay. But when it is controlled, it is very accurately helpful. Okay. Now, talking about history a little bit, in 2019, there was a slow growth phase in the whole global phase. Okay. Slow growth phase in the global economy. The global economy was already slowing down. But then it was worsened by COVID pandemic crisis. Okay. The supply chain crisis, everywhere. There was you know, supply concerns and different types of uh, you know protocols were taken, which was seen by the world for the first time, like lockdowns and stuff. So in that phase, in that particular crisis, what the United States of America decided was to start debt monetization. Okay. To print more money. Monetization means to print more money. Okay. And give it to the citizens from low to free credit set facilities. Like, take $10,000 from me, okay, if you want, and pay back like a loan, pay back 10,000 only, or pay back $10,100 only. Okay, 1% rate, interest rate on that particular debt. So that doesn't make sense na, for us. So that didn't make sense for United States of America now, but it made sense back in that particular area in 2019, because they wanted to avoid this slow growth phase, to avoid the recession then. So what is happening? They are getting a recession now. Okay, that is why I'm telling you that inflation is a fire. Okay, you might have put a blanket on it, but that blanket will also burn with it after some time maybe, but it will happen. Okay, the recession will happen. It will be just delayed by such tactics. Debt monetization is the last thing a particular central bank should do. It is the last thing. It is the worst of worst cases where debt monetization happens, or monetization happens for that case. Okay, and then the cherry on the cake, the Russian Ukraine confrontation and US Iran confrontation, etc. etc. So these geopolitical struggles have created a very good supply chain crisis also. So all of this is basically doing what? It's creating, okay, it is creating a whole lot of dead block. Okay, it is creating a block in the supply chain. It is creating a block in the overall flow of commodities, that is the supply. And it is creating a block not only in the flow of commodities, but also in the flow of money. Okay, that is why certain forex pairs are also seeing something which is very unique. Say for example, euro USD. The euro is basically uh, trading lower than the parity. Okay, so US dollar is way powerful than euro at current time. Okay, while we are talking. Next, so why this desperate effort of monetization was taken by the US economy? Such monetizations are usually transferred to future generation. That's what I said, right? Inflation is a fire. You cannot just dump it out. Okay, it will somehow go on into the future. Okay, if you try to put a blanket on it for some time, you might feel that it is gone, but it won't be. Okay, you have to get to the root of inflation right now, and nobody is talking about the root of the inflation, which we just discussed right now. All these are the cases, all these are the causes. There might be others as well. Okay, there might be others as well, but we are just discussing these three, which are the most major causes, I would say. So such monetizations are usually transferred. So the monetization, the cheap credit that was provided to citizens in 2020 in the during the pandemic, is now being transferred to current generation, current right now, in the form of what? Higher taxation or low capital expenditure. Now there is a extra money flow in the economy. So what they will do? They will try to suck it out. Okay, in a way. So how are they going to suck that out? By increasing the that particular where it is. Okay, so by increasing the interest rates. Okay, by increasing the interest rates, the cheap credit that was given will now be not very cheap. Okay, it won't be cheap anymore, it would be expensive debt. And that is why we are foreseeing a recession. Okay, now here also we can see that IMF hinted recently. There was a news that global growth outlook will be lower, which was 2.9% according to IMF in July, has gone down to 2.7%. So it is completely, on point with our discussion right now. And inflation is going to change the way we trade. Okay. There are certain examples also like Venezuela and Sri Lanka where they were not able to control inflation. Okay. Now we will see what is the current scenario. The darker the red color, the worse the situation is for those countries. This is the current scenario of the world right now. Okay, now let's see for G20, the least inflation is in China and Japan. Okay, now Japan is also trying to change its monetary stance. Okay, they are trying to increase the interest rate in order to control the inflation before it goes out of hand. Okay, unlike USA. USA is quite in between, and it has got 8.2% of inflation. Mexico 8.7. Worst cases Turkey 83.45, Argentina. Okay, but these two countries are used to higher inflation. They are used to higher inflation. Argentina and Turkey. Okay, these two countries. Apart from that, Russia is kind of struggling. Germany is in bad condition, and Euro area is also in bad condition. So let's just what is the time? So yes, this is the case where most of the countries are facing a dilemma whether to control inflation, whether to increase the interest rates, or whether to wait for some time and whether to consolidate their position. Just in the case of euro area, this one 10 is the percentage of euro area's inflation, which is very very high. Okay, it might go on to 14 and then 20 and 25. You won't know where it will go unless it is extensively handled by the central bank. Okay, this is the condition. And the next metric that we can talk about is the US growth rate. You can see a US growth rate here on this chart. So how the Fed intervention is going to turn out, that can be seen on the growth rate also. Okay, the Fed is not only increasing the interest rate, but it is also decreasing the growth rate, just as we discussed. Okay, the the credit will be expensive. Okay, as the interest rates are going up, credit will be expensive, and that is why the businesses who don't have proper cash flow, okay, who don't have proper cash in their hand, liquidity in hand, they will face stupendous horrors. Okay, you won't even see. And you will see in the in emerging markets like say for example in Asia, many of the startups are going to slowly back down. Once they were evaluated at say for example 100 crores and to 1000 crores, now they are going down. Okay, why? Because they don't have proper cash flow. This is one of the thumb rule for me to invest in equities. Okay, if any stock of any company doesn't have any proper cash flow model, then don't invest in that company no matter what, not even trade in that company. Okay, because cash flow is one of the most important. Okay, liquidity is one of the most important factor to look for. So one of the tips that you might take away today, apart from the understanding of this particular topic, monetary stimulus that was provided during the pandemic will now be compensated by higher taxes and more expensive debt. More expensive debt means the businesses will not be having as much liquidity. They will have to pay a higher interest premium. That is why they will borrow less and their expansion will be stopped. Okay, that is why they will stagnate in 2023, because the cheap credit that they were getting previously will now not be available to them. Accordingly, we see there is a lower and lower growth rate in the US. Okay, this is the scenario. Now let's just make an educated guess with whatever we have understood till this point. Let's see what is our understanding of this. Just give me a moment. Okay. Okay, yeah. So what will be the future for us, for traders, for those who are looking out for trading or investing? What needs to be looked at? Okay, what are the different criterias that we need to look at? So there is a recession possibility very much in both in the Western markets. Okay, so in both America and Euro area, which is looking stronger by the day. Every day, the possibility of a recession. We might be in a technical recession. but we have not seen the even the hour of the recession right now. Okay, because everybody is in a flowery state. Even the volatility is high, even the volumes are high. We have not seen a recession yet. Okay, believe me when I say this. So I'm not just scaring you away, I'm just letting you know some things. Okay, so if we can consider one of the advices of one of the most outstanding fundamental analysts, that is Warren Buffett. So he says that be greedy when others are scared, okay, and be scared when others are greedy. So currently there is a greed and fear both is going on. When everybody will be fearful, that day we have to be greedy. If those who can understand it, they will understand it very well. Apart from that, risk assets can retrace beyond COVID levels. This is my personal understanding. This is not, a proper estimation that you have to go by this. This is just my understanding. We can have a discussion on it as well. But if we have a discussion, this particular live stream will go on till next week. Okay, so just an idea that I have. That is what I'm putting out, and this is very much likable. This is very much likely that is going to happen. Risk assets can retrace beyond COVID levels because obviously the liquidity will be slushed out from them, and businesses will start crunching up money, obviously. And those who fail to do so, those businesses who fail to do so, those who have poor cash flow, they may also deteriorate, which we discussed just now. Okay, that is also the case. Very proper economic understanding of businesses is that if they don't have proper liquidity, they can't go on very long. Okay, so that is one of the problems. Apart from that, commodities are a bit tough to get hold of because commodities have different factors and different understandings. Their supply and demand is kind of different. So what we can say is that technically the downtrend is continuing gold and silver in metals, and because the dollar is getting too strong. Okay, dollar is strong right now, that is why this downtrend is continuing. The day dollar gets weak, the day the dollar gets weak, everything will be turned out upside down. So that might also happen. Otherwise, it may just get on with it. Okay, the people would look out for dollars because it is a safe haven currency, and this thing may continue. Downtrend may continue. That is also the case. After this particular discussion, I'm just going to show you one thing that I just discussed. Uh, put that just I kind of saw. I'm just going to share it with you guys. And last point is that the war result, obviously, get on with it. Okay, it has been such a stretched war, such bad supply conditions. The inflation in Europe is completely this particular thing. Okay, and other geopolitical conditions will impact oil and other minerals and also grains. If you are a futures trader, then you might be thinking about this particular news. So all of this turns down to only one point. It boils down to only one point, that is inflation. Okay. Remember one thing that has been said by this guy that I just iterated. He says that be greedy when everyone is scared and be scared when everyone is greedy. So remember that point. Those who understand and those who understood it very well. If not, we can take it up this discussion any day. So let's get on with something that I saw in the market, and I don't know whether it is going to happen or it is just another price action strategy. Okay, just give me a moment. Okay, okay. I hope this will be visible now. Okay, so I hope this is visible right now. Okay, so for something like gold, okay, remove this. This is a long term, prediction, a long term idea. of something that has been happening for a very long time, and nobody can gauge it as such. Okay, nobody can see this. You go on to monthly. Monthly is also visible, and weekly is also visible. Okay, so when we see this thing, I'm just going to draw some things and just let me know if you can make sense of it all. Oh my god, delete this. I don't need this one. This one. This here is the loop. This one. Okay. Can you say something that I can, that what I'm doing here? Okay. So this is the weekly chart of this particular commodity, and just look at this. I realized it after a very long time because it just doesn't make sense to me. After so many days, after since I suppose April 2020, the uptrend was there, and then it took a resistance. It took the same resistance at this point, and then it went down. And it just looks like a proper, what do we call it? An M formation. Okay. We call it an M formation, isn't it? Or a double top. This is a double top. Okay. So this is completely price action. Okay. So don't worry about it as such. This might be correct. Sometimes this is also wrong. So a huge disclaimer before you take it seriously. But this is, however, to be taken seriously to those who are investors, those who are long term traders. Okay. But this is something that just I looked at, and I was just making some prediction on this. I looked at the weekly chart, and it just gives me the vibe of what else is going to happen in the future market. Okay. Look at the movement here. It has been a proper textbook definition of a double top on the weekly chart. Okay. So it is very long term. It is more than long term. 2 3 years I'm talking about. Okay. Now this might be the case. Now, if you go to monthly, this whole situation changes drastically. Okay, and it looks like a textbook definition of, again, double top. Monthly, look at all these red candles, and this is outstandingly proper definition of a double top. So I hope those who have understood it from the previous live sessions, what does this particular classic chat pattern does, what happens in the future, that also you know. Where is the target price, that also you know. And this might be the case in the long term. Or if it fails, like if this particular candle of this month closes above this particular level, that is 617 1677, then it might be a false one. Or in the next month it closes above this one, or in the next month if it closes above, that is more important. If it is a green candle and it closes above this level, then you might say, and otherwise, apart from that, this is going as planned. The current scenario is as planned by the price action strategy. Okay, this is what it is. And I suppose we have had uh, so much to discuss today. So nobody answered the question. I'm really hoping that you understood what I said during the whole session, and I hope you liked it. So thank you very much for joining in, guys. We'll see you next time. And until that time, happy trading. Goodbye. Take care.